As we look at the Fed fund rate, the first thought is, okay, if the Fed fund rate, short-term rates going down, that likely means all interest rates are going down and mortgage rates are going down and company loans and things of that nature. It hasn't been the case so much. And so something really key for us to watch here in the year ahead is as the Fed likely cuts short-term rates, do longer-term interest rates follow suit? Or do they potentially decouple and go higher the other way, even as short-term rates are going down? And a perfect example of this is as we look at the beginning of this recent Fed rate cutting regime, going back to September of 2024, before that initial round of rate cuts happened, you could see the 5-year interest rate for Treasury bonds was at 3.65% per year. The 10-year was at 3.84%, the 20 at 4.2%, and the 30-year at 4.13%, as you can see. As we fast forward in a series of rate hikes, again, seeing the Fed fund rate drop from 5.5% to 3.5 to 3.75%, the initial thought is, wow, interest rates must be lower, across the board. That hasn't been the case, right? So as we look at December 11th, I'm recording this as of December 12th, right after the Fed fund rate meeting, you could see the 5 years at 3.72, the 10-year at 4.14%, the 20-year at 4.75%, and the 30 at 4.79%. Across the board, these rates are higher than they were when the Fed started cutting. And on the longer end, so the 10 into the 20 and 30 year by quite a wide margin. And it will be very interesting to watch how much control the Fed has with rate cutting in terms of having borrowing rates go down, having mortgage rates go down, making it cheaper for companies to borrow. Because the market's been speaking a little bit, hey, Fed, you can lower short-term interest rates as much as you want, but we are worried about inflation. We're not going to lend money at that bargain level low rates. We need a return and some cushion to handle the inflation if we're going to lend money to the government. And so as a result, you've seen a bit of a decoupling there. So that'll be very fascinating to watch as we move into 2026.